Hello students, I am Dr. Nitin Kumar Agarwal, Associate Professor, Timit College, Moradabad itself. So I welcome you all to today's session, again that is financial accounting. So the today's topic would be trial balance. As you are aware of the journal entries and ledger posting. So after that you have to come to prepare the trial balance. So today you would be knowing about the significance of trial balance, how to prepare the trial balance, and exactly what is the role in accounting of trial balance. Right. So what is the trial balance? Before we start with today's topic, I would like to give you some information regarding the previous lectures as journal entries and ledgers, because it is that trial balance is based on the ledger balances. So you have to be very conscious when you are maintaining the journal entries, or you are entering the business transaction into the journal, right? And after that, if you come to post those entries into the ledger, so trial balance as is, it is based on the balances of ledger. So you have to be very conscious when you are going to enter any entry in the ledger or any entry into journal, because if there is any error, no doubt the trial balance is there to verify that if any error is left in the ledger posting, so you can catch it, you can identify it. But sometimes what happens that if any error is there, and maybe the trial balance is not able to, or it is you find that a particular difficulty in finding out any particular error which was left in the particular book. So what is the trial balance? Trial balance is a bookkeeping worksheet in which the balances of all ledgers are compiled, or you can say it is the statement which is prepared at the particular time period, right? It is prepared. So in the debit and credit columns, with the debit and credit columns in a particular format, it is prepared. It is the statement which is prepared to tally the accounts, or to know that any error is there or not, right? So in order to verify the accounts, verify the ledgers, and to find out any human error, so if any arithmetical error is there, so you can find out with the help of the trial balance. So it is very very important statement, because on the basis of the trial balance, the students would be able to prepare the financial statement at the end of the financial period, right? So I think you have the sense of the trial balance. It is the statement which is prepared on at a particular time period, maybe monthly, maybe quarterly or annually. So if you are going to prepare the trial balance, first of all you should be ready with your balances extracted from the ledgers, and each account you have to close, because the balance would be there in the ledger, and those balances would be considered while preparing the trial balance. So I think now you are familiar with the term, this trial balance of bookkeeping. Okay. So what is the purpose of the trial balance? First of all, you should be familiar with the purpose of the trial balance: to verify the arithmetic accuracy of the ledger entries. No doubt, as you are maintaining the business transaction in the accounting books in the form of the journal entries, and those journal entries are posted, or the particular ledger is maintained for that. And ledger as a group of accounts, or you can say it is the place where you are posting all the transactions, right? And of the similar nature, because all the entries of the same accounts would be posted in the ledger. So you are having the group of accounts in the form of the ledger, and once you have entered all the business transaction into the ledger, then you have to close the accounts, and you find a particular balance, and balance may be of debit side or the credit side. So if you want to prepare the trial balance, so exactly what is the role of trial balance? What is the purpose? The purpose is to verify the arithmetic accuracy, maybe at the time when you were posting the entries into the ledger, and maybe you are leaving some transactions to be recorded in the ledger, or maybe you are writing the ledger, or writing the ledger book by entering two times the same entry. So maybe different kinds of the errors may take place. So in order to verify the arithmetic accuracy, you need to prepare the trial balance, right? So second one, the purpose is to prepare for the creation of the financial statements. As you know, in order to find or in order to know the financial position of the business, the financial statements are prepared by the accountant at the end of the year. So as for example, the income statement, or you can say the balance sheet, right? So under the financial statement, whatever the income statement or balance sheets are prepared, those are based on the trial balance, because on the basis of the balances from the trial balance, you have to prepare the financial statement. So it is very helpful in preparation of the financial statement. So this is another purpose of preparing the trial balance, right? And to detect and correct the errors in the ledger account, because sometimes what happens that after closing the books, or if you have prepared the financial statement, it is very Herculean task to find out the error or to correct it. So before you are going to prepare the final account, if the trial balance as a check, there is a particular system that you can detect and correct the errors in the ledger account. Okay, so this is the particular purpose of the trial balance. And exactly what is the structure? So first of all, we should discuss the structure. It typically includes the account names and their respective debit and credit balance. So it is not a very biggest structure, or it is not consisting of a very huge structure, you can say. Only the account names, whatever the accounts were opened in the ledger, so you have to take the balances from the ledgers, and those balances would be written in the trial balance. So the account names you have to mention in the trial balance, right? And the debit and credit balance you have to consider while preparing the trial balance. And what about the preparation? So it is prepared at the end of the accounting period. As I told you, that monthly, quarterly, or annually. Generally, it is prepared annually. Okay. And what about the components? No doubt, when we are preparing any statement or any account, that time the components. So the components, you can say the debit balances and credit balances, that two columns are there. So debit balance represent the assets, expenses, and losses, because under the double entry system, as you are writing your books of accounting, so you have to make you have to consider two aspects of any account. It means every account is influenced by two sides, that is the debit and credit. So you have to identify that particular transaction or particular account is asset, expenses, or losses, because all the assets from the very beginning, when you learn about the journal entries as per the rules, you made those accounts which are assets, which are expenses or losses, all were debit. And when it comes to profit gains, right, so it is to be credited, or any liability, right? So capital, again equity, as you see that in the credit balance. So debit and credit balance, what you are taking from the ledger, or you are extracting the balance from the ledger. So first of all, you have to identify that what kind of the account is. If it is an asset, it is an expenses or losses, it would be displayed in the debit side of the trial balance. And if there is a case of the liability, equity, capital, and income and gains, it would be treated, or it would be displayed in the credit side of the trial balance, right? It comes to verification. So how will you verify that there is any error or not, or everything was in the order, right, properly, the ledger system was maintained? So if the total debits equal the total credits, because I told you that there are two columns, debit and credit, in the trial balance. So if the debit and the total of credit, right, it means you have to take the total of debit and credit side. If both the total are balanced, both the total are equal, so you can say trial balance is considered balanced trial balance. So that time you can verify that there is there is no any error, arithmetical error. So in order to arithmetic accuracy, you can say, we prepare the trial balance, right? So if the balance, right, the total is unequal, you can say, of the both side, so it indicates that there may be some errors in the ledger entries which need to be investigated and rectified. So the trial balance just give you the information that there is a errors, but it will not search the error where the particular error is. it is up to you that from the very beginning you have to go for checking that where you find the error, right, or what kind of the error is there, because in today's session definitely we would be covering the different kinds of the error which are not disclosed by the trial balance itself. But exactly now you are aware of this particular term, that what is the trial balance, right? So trial balance is the statement which is prepared monthly, quarterly or annually, and generally it is prepared at the end of the year, and it is prepared to verify your ledger, because in the ledger you have posted all the entries from the journal. So is there any error? In order to ensure that no error is left, or in order to know that if there is error, and uh, you have to correct it timely, because if the particular error is not found out in the ledger system or in the journal entries, so in future definitely you would be facing the difficulties when it comes to prepare the financial statement, because the balance sheet will not match over there. So in order to verify your ledgers, you need the trial balance to be prepared, right? And example, as on the screen you can see that account name, debit and credit. So different accounts, as you are reading, that cash account, accounts receivable, inventory, accounts payable, capital, revenue and expenses. So in this example few accounts are mentioned with their balances. As you see that the cash account is having the debit balance. So as from very beginning, if there is a balance with cash which is positive, you can say that cash always is debit balance, so it is an asset, and all assets or would be displayed in the debit side, so it is displayed in this trial balance in the debit side. Account receivable, again 3000 rupees is displayed in the debit side, because account receivable is asset, and all the assets are debit. So in the form of the assets, is it is displayed in the debit side rupees 3000, and again it comes to inventory, and inventory 2500 in the debit side because of being the assets. And now we come to the credit balance, because accounts payable, it is the liability you have to pay, right, in future. So all liabilities are credit, so 1500 is displayed in the credit side. And capital, again the case of the liability from the perspective of the business organization, so it is written over there in the credit side. And revenue, as we are talking about the sales, because the revenue is the total sales, right? So what comes in, it means you are receiving the cash, you are receiving the income. So sales or the revenue or the incomes would be displayed in the credit side. So revenue, again as part of this particular statement, is displayed in the credit side, and all the expenses as per the rules of the accounting are debit, so expenses 2000 is displayed in the debit side. So I think there is no big deal that you prepare the trial balance while extracting the balances from the ledger, but you have to be conscious that every account is to be mentioned in the trial balance, and the balances as you extracted from the ledger should be mentioned corresponding to the particular account, right? And after that you have to tally the debit and credit balance of the trial balance, and if there is no any discrepancy, there is no any error, so that time your trial balance will tally, will match. It means the debit and credit side of the trial balance would be equal. So in this particular example you see that 12,500 is the total of debit side as well as credit side. So we can say there is no arithmetical error in the ledger posting, right? So this is the example of the trial balance. And definitely this is the topic to be discussed with you, that what is the importance of trial balance. So accuracy check, as I told you that in order to ensure the accuracy of the ledger posting, right, so it helps in ensuring that the entries in ledgers are accurate. And second thing, because trial balance is the foundation of the financial statements which are to be prepared at the end of the year in the form of trading P&L account and balance sheet. So financial statement preparation, definitely the trial balance is serving you as a basis for preparing it, right? And error detection, because it helps in identifying the discrepancies, and you find that some errors are there, but thoroughly you have to go through your entries, or you can say the journal and ledger posting, because the trial balance itself will not describe you exactly where is the error. It will tell you, it will just describe that some errors are there, or there may be some errors, right, if the balance is not equal of the debit and credit side. So this is the particular statement which is having its own significance, right? And errors, as I told you, that definitely we have to cover this topic, and some errors are there which are not disclosed by the by preparing a trial balance. Sometimes what happens that accounts are maintained, or the journal entries or the ledger posting were maintained properly, but some errors were left over there, and such kind of the errors which are which you can say the principally those accounts or the entries or the posting into the ledger are not correct, but maybe there is a particular impact, or there may be some errors, right? For example, errors of omission: when a transaction is completely omitted from the books, it means suppose any transaction which takes place in your business organization, and if you leave it, you ignore it while making the journal entry or while posting into the ledger. So what happens that both the debit and credit side of the trial balance remains unaffected, and the trial balance will match, the balances of the trial balance of the debit side and credit side of the trial balance will match, and you will think that there is no any error, but there is error, right? So errors of omission, it means you are not writing, you are not entering a particular transaction in your book. So for example, if a credit sale of rupees 500 is not recorded at all, so what would happen if you don't record this particular transaction as a journal entry, or you don't post into the ledger? So the particular if you make this entry, just try to make the entry of this transaction, you will find that credit sale is there, right? So what would be the entry? You are giving to someone, suppose X is there, so X would be debit over there and to sales account. So the account receivable, right, no any account receivable is debit, and you are not writing in the credit side, so debit and credit side both are unaffected, and 500 rupees transaction is not recorded. So there is a error, the error of omission. It means you are ignoring a particular transaction, you are not writing that transaction which took place in the business, and there is no effect on the books, there is no effect on the trial balance, but the error exists over there. So this kind of the error is called the errors of omission, right? And errors of commission: when an entry is made in the wrong account of the same classification, it means this is you can say the principal error, because same classification, right? It means two accounts are there. For example, posting a payment of 200 rupees for office supplies to the utilities expenses account, or another example, suppose you are writing the particular expenses in term of wages, but that was the case of the salary. So you are writing the entry, you have entered the particular transaction in the book, right, and the amount is correct and the date is correct, but what happens that expenses name is incorrect. So exactly what would happen, that there is no effect on the debit or credit side, and you will find that the balances are equal of the trial balance, and you will think there is no any error, but arithmetically it is correct. But if we talk about their errors of commission exist. Errors of principle: when a transaction violates accounting principle, such as recording an expense as an asset. As I told you that all the expenses and assets are shown in the debit side. So if there is a transaction relating to expenses, but you are writing instead an asset, so what would happen, that everything is correct, right? Because the amount is correct, you have also entered the transaction, there is no any omission error. So what would happen, this is the error which is called the principal errors, where you are treating an asset as an expense, right? So recording a rupees 1000 purchase of equipment as an expense instead of an asset, so you are writing an expense, right? It should be an asset. So what would happen that because the expense is also written in the debit side and assets is also written in the debit side, so you are writing 1000 rupees, but you are not giving the name to a particular assets or expenses. So that would be the errors of principal. And compensating error, it means one error is compensating another one, right? When two or more errors cancel each other out, so effect, there would be no any particular effect and trial balance will still balance, right? For example, understating a sales account by rupees 300, you are undervalue, okay, you undervalue the sales account by rupees 300, okay, it means sales is decreased over there by 300, right? You are not writing the correct amount of sales which was made, and understanding in the same way an expense, because suppose you are writing the expense reduced by 300, so exactly there would be no discrepancy in the trial balance, because the debit and credit side, if both are balanced, both are matched, so there is no error would be treated over there, the case of no error. But why exactly, what happened if you analyze this particular transaction, what happened, because you are writing the sales in the credit side and expense in the debit side. If the credit side is undervalued and debit side is undervalued, so exactly what happened, that there is no impact arithmetically on the debit and credit, both the balances will match. So this is the compensating error in the trial balance. And errors of original entry, it is very simple to understand that when the original entry is incorrect but the debit and credits are equal, the trial balance will balance, right? So at the time of journal entry, if you are making the entry wrong, right, but the because you are entering the amount in the debit and credit side, right, so balance from very beginning is equal and you post the same entry into the ledger, there is no any impact on the debit and credit balance. And when finally you prepare the trial balance, you will find that there is no any error, but error exists in the name of the original entry. For example, recording a rupees 540 purchase as rupees 440 in both the purchase account and the cash account, right? As you see, this is the transaction worth rupees 540, but you are writing 450 in both the places, debit and credit. So this is the particular, you can say, the case of writing the amounts wrongly. But because suppose you are writing in the credit side the different amount as compared to the debit side, so there would be a mismatch. But in this case, because from the very beginning you are writing 450 instead of 540, so trial balance will show the equal debit and credit balance but with incorrect amounts, right? So this is the errors of original entry. And errors of duplication, if you are writing any transaction twice or more times with the particular amount, so if the entry is duplicated, the trial balance will balance because there is no mismatch in the debit and credit side. That's why I am telling you that when you are preparing the trial balance, only the trial balance will give you the information regarding the arithmetic accuracy, is there any error, but it will not tell you that exactly what happened. You have to go through out the books and you have to find out the errors. Errors in subsidiary books as sales book or purchase books, if are prepared, and if any error is made in that kind of the book and it is carried forward to the ledger account, will not affect the trial balance, right? So if you have made any entry in the wrongly in the sales book and that particular transaction is carried forward to the ledger account, so because you are carrying the particular amount and there is a match from very beginning, the debit and credit balance, so the trial balance will not be affected. For example, an invoice entered incorrectly in the sales day book was but transferred correctly to the ledger, okay. So prepare trial balance considering the following business transaction. This is a very small example for your understanding that how to prepare the trial balance. For example, there are some transaction as you see on the screen, that new business started with capital rupees 1 lakh. As the new capital was started, so you are bringing the capital. No doubt you have to make the entry cash account debit to capital account, and goods bought for rupees 40,000. It is the cash transaction. So purchase account debit to cash account rupees 40,000. I am just not writing here because I think as you have covered, as you have learned about how to make the journal entries in the previous lectures, so I think there is no need to go for the revision of the journal entries. But right now, because I am considering the trial balance, focusing on this particular statement. So you need to go quick, I think, and it is sufficient for you with the information that I am just reading this business transaction, and you have to make the entries, right? Machinery purchased worth rupees 20,000, so machinery would be debit and to cash account because the cash is reduced over there. Goods sold for rupees 30,000, it means cash account debit to sales account, and goods sold to Mr. Deepak rupees 5,000, Mr. Deepak would be debit to sales account rupees 5,000. As you can see on the screen, these journal entries are already on the screen. We have made it. Cash account debit to capital, being capital introduced in the business. Purchase account debit to cash or bank account. Yes, you have to be very conscious. If you are issuing the check, it means that is the entry that you have to credit the bank account, right? And but in this particular example, because you are paying the cash, so cash account would be credited, right? Machinery account debit 20,000 to cash or bank account 20,000. And sales, you are selling the goods for cash, so cash or bank account debit to sales account. And Mr. Deepak is as individual or the party, because if there is a particular party name, so you have to make the receiver debit. So Deepak is the receiver of the goods in this particular transaction, so Deepak would be debit and to sales account, right? These are the journal entries which are prepared on the basis of the financial transaction, right? These transactions. So you have made the journal entries, and now we come to posting into ledger, right? Because before preparation of the trial balance, you need to prepare the ledger. So ledger posting already you are aware of. So in a very quick view, we have to go through it. And the first is the capital account. As I told you that when you are preparing the ledgers, so every account as per the transaction you have to open in the ledger. So the very first account, because you are bringing the capital, you introduce the capital, so capital account would be open over there, right? And you can see that credit balance, the capital account is showing the credit balance, because from very beginning, as you entered into your books, the first entry, that cash account debit to capital account, so capital account is credit. So again you see here in the ledger that cash capital account is credit, right? The balance of the capital account is credit rupees 1 lakh. And purchase account, because from very beginning purchase was debit, okay? So the entry is here to cash 40,000. So you are observing that the balance is the debit balance, because the purchase account is debit, right? So there is a particular balance. And if we talk about the machinery account, because this amount 20,000 balance of machinery is also the debit balance because of an asset. And sales account, you can see that two times, right? There is a particular two transaction, you can say that in the example. So first transaction is the cash and second one is the credit transaction, because you are selling the goods to Mr. Deepak, the party name is given to you, right? So very first entry in the sales account, you find that it is the by cash rupees 30,000, it is the balance, and Mr. Deepak 5,000. So total balance of the sales account is the credit balance would be taken into consideration, the credit balance 35,000, because if you are finding the difficulty exactly what is the balance, right? Because if you calculate the balance taking the totals and subtracting the balance of the debit or credit side, you easily you can find that what is the balance debit or credit. Because if the debit balance, suppose you take the total of debit side, so if the total of debit side is high in comparison to credit side, so definitely you can say there is a debit balance and vice versa. So in this case, you see that I want to tell you that sometimes if you get confused that exactly the particular amount is debit or credit, so many accounts by nature you can easily understand that what is the particular balance, because from as per the rules of the journal entries, you can find it, you can identify. For example, if you find that what is the balance of sales, it would be debit or credit. So no doubt from very beginning you are writing every sales in the credit side. So definitely the balance of the sales account would be credit, right? And Mr. Deepak account, as you see that you are selling the goods to Mr. Deepak. So Deepak is debit and sales is credit here. So Deepak is debit. So this particular balance which is extracted from the ledger of Deepak, it would be assumed as the debit balance. And now we come to the cash account. So cash account, definitely there are a number of transactions in the debit or credit side, so you have to take the total of debit and credit. But if you want to make your understanding very easy, so that time you have to think that because the cash is an asset, so balance would be definitely the debit balance, right? And this is the summary of the closing balances already, because we have taken the summary, right? These accounts were considered into example: capital account, purchase account, machinery account, sales, and Deepak. Capital, purchase, machinery, sales, and Deepak, right? So these are the particular balances, summary of the closing balances. Capital rupees 1 lakh CR, credit; purchase debit, machinery debit, sales credit, Mr. Deepak debit, and cash debit, right? Or uh, you can have a look in the particular account. Suppose cash account, there is a balance of 70,000, right? So I have written over there the 70,000 as a debit balance of cash, okay? Or suppose another account, suppose you take the account capital account, you find the balance rupees 1 lakh, and capital is always credit side, so you have to mention in the summary the credit balance of 1 lakh of capital account, right? For example, capital account is 1 lakh as a credit balance is displayed in this particular summary, right? Now it comes to the preparation of trial balance. So this is the very short example of trial balance, and in the further new lecture, uh, I would be solving a particular question of journal entry and ledger and trial balance at the same time, so that you can develop the understanding how to prepare very practically the trial balance, right? But with this short example, you can develop the understanding at the initial stage. And you see that I told you that three columns are there: account, debit, and credit balances, right? So there yes, it is mention worthy that if you are going to prepare the trial balance, there are methods of preparing the trial balance, and in the next lecture I would be covering that part also, right? So today we are discussing about the role of trial balance, how to prepare the trial balance, exactly what is the need of the trial balance, right? So trial balance is very very important statement when it comes to check the accuracy of the recording transactions in the ledger, right? But trial balance may have some errors. So those errors you have to go to find out through your books yourself, right? But you can ensure by making the trial balance that is there any error or not, right? So on the basis of the trial balance, the financial statement, as I told you, are prepared at the end of the year. So these are the balances. With the help of these, you can prepare your financial statement, your income statement, and the balance sheet. So this is the particular trial balance, as uh, it is prepared with the help of the balances, right, taken from the ledger. So as the summary was given to you, summary was disclosed on your screen that capital, purchase, machinery, sales, Deepak, and cash, right? And balances are written corresponding to every account. So these balances are shown in the uh, trial balance. Again, this is, you can say, the summary, but in a particular format: debit, credit. So this is the format of the trial balance, as you have to mention all the accounts, right, in the first column. And then if the account is having the credit balance, then only in the credit side, credit balance, you have to mention the worth of the account, the balance of the account. As you see that capital is rupees 1 lakh as in the credit side, not in the debit side. And purchase, as being in the summary, you see that it is debit 40,000. So purchase account is debit 40,000, and right. And machinery, as you see that 20,000 is again the debit case, so machinery account is debit, right, 20,000. So such you are just preparing the trial balance, and when you take the total of debit and credit side, already you can see that 1,35,000 is the debit, and credit, both the total are equal. So we can say there is no any arithmetic error, or there is a accurate information, there is a accuracy of the ledger. But as I told you that some time what happens that there is no impact, it is untouched, right? Trial balance is not informing you of any error because of different types of the error already discussed during the session. So you have to be very conscious when you are preparing your accounts, when you are posting entries, when you are posting entries into the ledger. Okay, so I think today's session is fruitful for you when it comes to preparation of the trial balance. Thank you very much.